Right now, the crypto market is sending some seriously mixed signals. On one hand, the price charts look heavy, they're hinting at another leg down. But if you dig just a little deeper, the underlying on-chain data is telling a completely different and way more optimistic story. Welcome to Daily Crypto Edge. It is Friday, December 26, 2025, and today we're going to break down this fascinating conflict.
So let's start with the market's pulse. Right now, the fear and greed index is sitting at just 20. Now, that's deep and extreme fear territory. And I know that might feel like a reason to panic, but history tells us a very different story. This level of fear, it's often a really powerful contrarian signal. It suggests that some of the best buying opportunities could be right around the corner.
Okay, so here's our game plan for today. We're going to start with the big picture, this market fear. Then we'll zoom right in on Bitcoin and its current struggles. After that, we'll uncover the hidden strength I'm seeing in Ethereum, and then, most importantly, we'll translate all of this into an actionable game plan. And finally, we'll map out the most likely future scenario so you're prepared. To really figure out how to navigate this market, we first have to understand where all this fear is coming from. Because, it's not just random panic. There are some very real-world events casting a pretty big shadow over everything right now. This level of fear, well, it's historically been a massive contrarian indicator. The data is crystal clear on this. Buying when the index is this low has often led to some pretty significant returns within just 6 months. It really is the classic Warren Buffett strategy, right? Be greedy when others are fearful. And this fear, it's not totally baseless. We've got two major events looming on the horizon. First, new stablecoin regulations are set to drop on January 1st. And then, sometime in the first quarter, we've got the Federal Reserve's big interest rate decision. These are the two catalysts that have the entire market holding its breath. So how is all this fear impacting the market's anchor, Bitcoin? Well, let's be honest, despite its king status, it's currently showing some pretty clear signs of technical weakness.
Bitcoin, which is trading around $88,600, is basically grinding its way downwards inside what we call a falling wedge. Now, this pattern often resolves to the upside, which is good news, but the key word there is resolves. For now, Bitcoin is still trapped, and it's really struggling to find any real momentum.
And if you look at the technicals, they're painting a picture of a real tug of war. The weekly momentum indicator, the RSI, is below 50. That favors sellers, but on the daily chart, another indicator, the MACD, is starting to flatten out. That's a little hint that sellers might be running out of steam. So what does that mean? It sets up a really clear battleground. You've got resistance around $99,000 versus critical support down near $80,500. Okay, now let's pivot over to Ethereum, because this is where the story gets really interesting. Despite its price looking pretty weak on the surface, the underlying data is screaming a completely different tune. Ethereum, trading at about $2,650, appears to be in a classic accumulation zone. So even though its price has kind of lagged behind Bitcoin, it is holding a really critical support floor at $2,400. And that's exactly the kind of price action we see when large, smart money investors are quietly building up their positions. And here it is, the key technical signal, a bullish divergence on the RSI. So what does that mean? It means that while the price has been making lower lows, the momentum indicator, the strength, has actually been making higher lows. It is a classic, powerful sign that selling pressure is fading and that momentum is quietly shifting back to the buyers. And on top of that, the MACD is getting super close to a bullish crossover. When you look at the on-chain data, it shows a stark contrast between these two assets. For Bitcoin, network activity is at a yearly low, and institutions are actually pulling money out. But for Ethereum, new addresses are spiking, and the whales, the biggest players in the game, they are aggressively buying this dip. The underlying data for these two assets is literally moving in completely opposite directions. Okay, so that's the analysis. But what does it all mean for you, right? What do you actually do with this information? Let's get right into the actionable game plan. First, and this is absolutely critical, a warning. We're in a holiday period, and that usually means lower volatility. This is not the environment for high leverage trading. Seriously, our recommendation is to keep any leverage under 3x. The name of the game right now is patience. So for Bitcoin, the strategy is all about patience. We're not buying here. We are waiting for a potential flush down to our entry zone, which is between 78,000 and 82,500. And that lines up perfectly with that key 200-day moving average we talked about. Our stop loss is a very clear invalidation level, and we'll start taking profits as it moves back up towards that resistance. For Ethereum, though, the plan is different. Given those strong on-chain signals and that bullish divergence, the strategy here is more of an aggressive accumulation. The entry zone is pretty much right where we are now. The stop loss is placed well below that multi-year support level, which gives the trade plenty of room to breathe, and we've got clear targets for taking profit.
So how does this all translate into a portfolio? Well, we recommend about a 40% allocation to Bitcoin as that kind of defensive anchor. Then 35% to Ethereum for its higher upside potential, and crucially, 25% in stablecoins. This dry powder, this cash on the sidelines, is absolutely key for being able to capitalize on any major dip.
All right, let's wrap this up by looking ahead. The market rarely moves in a straight line, we all know that. So let's game out the most likely scenarios so we can be prepared for whatever comes next.
We basically see three primary paths forward from here. There's about a 55% probability of a New Year reversal as new capital typically enters the market in January. We give a 30% chance to a macro flush. That would be one last major dip driven by wider economic fears. And finally, there's a pretty low, about a 15% probability of a full-blown crypto winter 2.0.
And this brings us to the ultimate question for the coming weeks. Will the market's visible fear, the thing everyone's talking about, win out? Or will the hidden strength we're seeing in the on-chain data prevail? That is the key conflict we'll all be watching. Remember, these are probabilities, not guarantees. Risk management is your only edge. If you want daily crypto market reports and tips for trading, subscribe to Trade Compass and turn on the notifications. Hit that bell so you never miss a move.